I won't stop till I hear him say,
look at this. A week before the rate hikes came out, whales in the market, they sold. Then days before the rate hike came out, they bought price up, enticing retail investors to buy, creating trendline liquidity. Look at this. It's so freaking manipulative. Alrighty, what is going on, CYPRX advanced YouTubers? Welcome back to the CYPRX YouTube page. In today's video breakdown, I am going to explain to you all everything that is going on in the cryptocurrency market as of today with this whole Kraken announcement, the staking announcement that was introduced by the CEO of Coinbase, all the rumors and whatnot, showing you all how retail, as always, are in this case most likely wrong with the pullback that we are currently experiencing in the cryptocurrency market. I'm going to give you guys evidence to support my thesis, showing you guys how, in my personal opinion, this has been in the works since the Fed rate hike that was announced on February 1st. Alongside of the positive employment data that we just received, I don't think that this Kraken whole escalation thing with the staking platforms and had anything to do with the prices of crypto depreciating in value today. All right, and I'm going to show you why. So if you all remember, starting all the way back in August 10th, 2022, we had Coinbase said it's being probed by the SEC over its staking programs, which allow users to earn rewards for holding certain crypto. So this has been something that's been going on for quite some time, but as always, we are a species of amnesia, and people tend to forget that this has been going on for quite some time. So this is nothing new to the markets, right? This whole scare that's happened today, quote unquote, again, retail investors, all of these herd followers on YouTube and Twitter are all talking about that. Oh, this is why crypto dropped today. No, this is not why crypto dropped today, ladies and gentlemen. Let's wake up here at CYPRX. We are able to do further in-depth research surrounding the macroeconomic backdrop and geopolitical tensions and whatnot, things that actually move price. Okay, yes, obviously, of course, if some major exchange goes bust or some project goes bust, whatever the case may be, yes, that could cause a negative impact on crypto. But this little tiny Kraken thing, it's already resolved. Okay, it got literally resolved 2.5 hours ago, if I'm not mistaken. Okay, so that's again why I think that it has nothing to do with price. So we saw this came out, which was, I believe it was, if I'm not mistaken, this was like last night maybe, and then it just hit the mainstream today. Or maybe it was early this morning, and then it hit the mainstream today where they started writing news articles about it and whatnot, okay? We saw Coinbase CEO warning of a possible ban on retail staking. Well, again, like I said, this is nothing new because we see this article all the way back from August 10th of last year, right? Then we saw fundamentals come out like this. Again, retail herd foaming out of the mouth, trying to figure out why their portfolio is tanking because they're buying at tops. Here at CYPRX, just to show you guys. Okay, these are screenshots from... This was in January, the end of January. You can see the date at the top, 27th, 2023, January 1st, or sorry, January 27th, where we had been talking about LCX, and I give you guys my bearish targets, 8.5 cents to 5.5 cents. And I said, if we end up getting a pullback on LCX, these are levels I'm looking to buy more LCX at. I was telling you guys this because we were on the verge of getting the Federal Reserve rate hike announcement, which we got. They increased by 25 basis points. We saw that. And then just recently, we saw positive economic data surrounding jobs come out, which again is going to drive the Federal Reserve to want to increase interest rates. And I'll get into that in just one second. So we've been talking about this potential pullback that everybody's freaking out about today for, since the beginning of February, right? Again, the retail herd always chasing, what the rest of the market's doing. When here at CYPRX, we're already 10 steps ahead of the curve. We're already expecting this pullback because what goes up must come down, okay? And that is inevitable. If something surges in value and price, which has been going on in the crypto market since the beginning of the year, it's obviously, of course, to maintain healthy bullish momentum, going to need to create higher lows in the form of pullbacks. Now, in the case of crypto, and especially Bitcoin, that leads the market right now, those pullbacks are going to be drastic and seem like the market is bleeding. So we saw this Bitcoin price retreats amid reports of Kraken probe. Again, I'm showing you all how reading these articles and these fundamentals are distracting you from the macro backdrop, which is what is really driving risk on asset appreciating or depreciating in value. Then this just came out to solidify everything that I'm talking about. This already got resolved. Kraken reaches a $30 million settlement with SEC over staking as IRS seeks user information. This came out 3 hours ago, right? Cryptocurrency exchange Kraken has reached an agreement with the United States Securities and Exchange Commission to stop offering staking services or programs to U.S. clients. So they've already resolved this issue, or at least, excuse me, they've already settled with the United States. They banned, or at least here in the United States, Kraken banned crypto staking. Okay. So if you stake on Kraken, obviously, of course, you can't do that anymore if you're in the United States. I advise anybody that lives in the United States, again, not financial advice, I advise you consider not staking your crypto or unstaking your crypto, doing your taxes for this year and any staked crypto that you had for last year and any previous years before that, and then moving on with your life, right? Maybe potentially taking on day trading if you're interested in quick gains, right? So now this leads me over to the last thing that I want to talk about, which is this whole Ripple versus SEC case. I found this tweet. Okay, this came out January 18th, 2023. This guy, John Reed Stark, no idea who this gentleman is, but it reads, since its first crypto-related enforcement action in 2013 through 2022, the SEC has brought 127 cases, 82 litigation actions, and 85 administrative proceedings against digital asset firms and people. And as far as I can tell, has experienced not a single loss. I want you all to take into consideration, again, this isn't FUD. This is me as not only a influencer, but also a digital asset investor that holds a buttload of XRP. You need to take into consideration the worst possible scenario. And in my opinion, worst case scenario is Ripple loses the case. Okay. Again, all part of the plan. In my personal opinion, again, I don't think anything happens by coincidence. Ripple loses the case, the price of XRP tanks so that bank and institutional investors, major hedge funds, big whales in the market can get it at a discount. I've been saying for quite some time that the price of XRP, in my personal opinion, before we see new all-time highs, needs to see subpar of 25 cents and below. Okay. Is it possible? Of course it is. Anything's possible in this crypto market. Prepare for the worst case scenario. Again, worst case scenario is Ripple loses. And what happens? Brad Garlinghouse has already announced that they're going to go overseas if that happens. They're going to migrate to another jurisdiction where crypto is more, obviously, of course, easily developed, or where the development of crypto is, not frowned upon by the government. Okay. So take that into consideration, prepare for the worst. Obviously, of course, as a digital asset investor in a up and emerging new asset class, you should not be investing money that you're not willing to lose anyway. So people that are like, oh, well, Cypress, you're footing, well, whatever, then don't listen to me and then keep just chucking money into the market. And then when a crypto project dumps or tanks or some CEO rug pulls you and you lose your money, then don't come crying to Twitter or YouTube about it, okay? Yes, XRP is vulnerable to a rug pull, just like every other crypto asset in this market space. Is it likely? Probably not. With all the connections that Ripple has and everything that I do in the form of research, specifically here on this YouTube channel, I have a firm belief that Ripple will come out on top in the long run. In the short term, who knows? Okay. Prepare for the worst. So now I'm done my spiel. Let's talk about why I think this whole thing was, FUD in the market to, again, shake retail out. We're going to continuously see this. Like I said, it's already been resolved. Okay. Kraken already reached a settlement today, which again is how I think has nothing to do with the price action of crypto today. Let's look back at February 1st, 2023. This is when the rate hike came out. And I'm going to use XRP as an example just because personally I day trade XRP. So, I'm up to date with the price action on XRP. I've been paying attention to this for quite some time. And I've been also mentioning to you guys that as long as we hold above 35 cents, right, where we created that impulsive move all the way up into almost 44 cents, that we're most likely going to come up into the 49 cent to 56 cent psychological level. I've even posted that to you guys on Twitter. Okay. A pullback after breaking a previous market structure high over here to the left-hand side was inevitable. And you can see that the pullback started on February 1st when the Fed increased the rate size by 25 basis points. You guys can see right here, this is the DXY index on February 1st. At the same day, XRP, for example, again, you could probably do this across multiple crypto assets, started to pull back and decline in value. That is the same exact day that the United States dollar, quote unquote, bottomed out. Okay. We don't know if the bottom's in for the DXY or whatnot. I'm just saying that is when the DXY stopped its decline and has since turned around and gained in value. Okay. Tapping into that psychological level that we've talked about for quite some time, the 103 0.800. We're waiting to see if we retest this and close below it, continuously make another bearish leg down, or we break above it. If we break above it, we're going to see a drastic pullback on crypto, because historically, every single time the DXY is broken above the 103.800, it's gone parabolic. Okay, so we need to pay attention to that. That's something that I'm paying attention to heavy. But just to further influence what it is that I'm saying to you guys, think of the global macroeconomic backdrop. When all these other retail investors are freaking out about current fundamentals in the crypto space that come out from the freaking Daily Huddle and Cointelegraph and You Today, all these crappy little crypto websites, okay? Think bigger than that, ladies and gentlemen, please. Understand what really drives prices in these markets. The value of the US dollar index, the DXY, all right? Think about how many things it's influenced by. It's a number of factors. For example, interest rates, right? If the Federal Reserve raises interest rates or signals that it's likely to do so, the value of the US dollar is most likely going to increase as investors do what? They seek higher returns. Okay, well, guess what? The Federal Reserve has not stopped its rate hike cycle yet. Yes, it's decreased its rate hikes, but it is still in a tightening cycle, right? The Federal Reserve on Wednesday raised its benchmark interest rate by a 0.25 percentage point and gave little indication it is nearing the end of its hike cycle. So even in the FOMC statement, Jerome Powell said that they're not going to stop raising interest rates yet. Right? So what are investors going to do? They're going to flee to the United States dollar to seek higher returns on their initial investment, right? Same thing with economic data. We just saw recently some positive economic data come out for the United States. Powell says strong jobs report shows that more Fed rate hikes could be needed to lower inflation. So again, this is back in the thesis of another potential Fed rate hike in March, okay? So take these things into consideration, which are more of a firm grip as to what's going on in the crypto market, or has more of influence on price movement over these bullcrap fundamentals that have been streamlining since back in August of 2022. Okay, this whole staking crap that just flooded the market today, which is why all retail traders think that the market dropped, has been in the works for quite some time. Okay, it's nothing new. Another thing that we need to pay attention to as digital asset investors, risk on asset investors, is this geopolitical tension and this whole entire situation between China and the United States brewing up, okay? Where they just announced the other day that there could be a potential war between China and the USA by 2025. That would obviously, of course, if it came into fruition, cause risk on assets to tank in value. Like I said in previous video breakdowns, I do think that the global reserve currency status of the United States dollar is coming to an end, but right now that still holds precedence. Okay, the United States dollar is, for a fact, still the global reserve currency. And so with that being said, when the Federal Reserve is hiking interest rates or in a tightening cycle, people are going to flee to the United States dollar. The United States dollar is still above the 100 psychological level, so it's still strong. The Fed is still hiking rates. They have no sign of slowing down, even though, yes, like I said, they are decreasing their size of rate hikes. They're still hiking them, okay? So until we get that pivot, that pivotal moment where the Federal Reserve announces a dovish perspective and that they're going to stop the rate hike cycle, then we're either going to do one of two things. We're going to continuously see impulsive moves to the upside in crypto that are going to have drastic pullbacks, or we're going to see that the market is not bottomed out on risk on assets, and we're going to see further declines in value until the Federal Reserve, again, the global reserve currency, pivots in the form of its status via its rate hike cycle. That's my personal opinion. When these fundamentals come out, don't be the type of retail trader that just starts reading them and on the Twitter space and watching these YouTube influencers that have no credentials in the market. They draw Fibonacci's on their charts and steer you in the wrong direction. Study fundamentals, at least to the best of your ability, and understand what really drives these market prices in the form of risk on and risk off assets, and that is monetary policy, okay? Economic data, the risk sentiment, inflation expectations, interest rates, okay? Not crap like this that has been floating around the crypto market since back in August, okay? Now, if Kraken were to go bankrupt, or Kraken were to shut down completely, or rug pull all their customers, would that have a negative impact on crypto? Yes, of course it would, okay? But this is not the reason why crypto depreciated in value. Don't let any of these misleading influencers out there tell you this was the reason why. I'm clearly giving you guys an example that for example, XRP, which is a risk on asset, has been depreciating in value since way back on January 23rd, 2023, days before, again, priced in the rate hikes. Rate hikes came out on February 1st, and what were institutional investors doing? Can someone tell me that's on the Zoom? Look right here. The rate hikes were already priced in here days before the rate hikes came out. Institutional investors sold, bought price back up so they could do what right here? Institutional investors already priced in the Federal Reserve rate hike. Look at this. A week before the rate hikes came out, whales in the market, they sold. Then days before the rate hike came out, they bought price up, enticing retail investors to buy, creating trend line liquidity. Look at this. It's so freaking manipulative. 1 touch, 2 touch, 3 touch. Day before the rate hikes come out, institutional investors, what do? Sell from where they sold from days before. Had nothing to do with Kraken. Okay. So anyways, blessings to you guys. I wanted to clear that up because of this whole stupid news that just flooded into the market. Like I said, think twice if you're in the United States about staking your crypto. I mean, at the end of the day, the best thing to do right now, if you're in the United States, is just keep your crypto offline and just forget about it.
I won't stop till I hear him say